Hello, what is up, all of you beautiful subscribers? Welcome back to the Jack Chapple Show. So there's one stock that is down 71% on the year and 33% drop today. One stock today, and it's not a penny stock, it's a big company. We're going to talk about that. We're going to talk about Amazon, Google, microchips being implanted in employees. That's an actual thing that has happened now. We're in that, part of the reality now. We're going to talk about that with a bunch of other stock market news today, business news today. So just stay tuned. But I want to start off with this one company that dropped 33% today. I want to start off here with Hibbett Sports here. So Hibbett Sports is down 33% today. I'm going to talk about why that is. One of the biggest drops we've ever seen on this show, and it's actually for an okay reason. And look at this. 1 year performance down almost 71%. Actually, I'm curious to see what the max is here. See, I'm also doing it this way. I'm going to maybe potentially do a lot more screen capping like this because I think it's better to have moving visuals than just me, this ugly mug here, just talking to you all the time. And so, going back to, they've been a company since, 45. They're selling sporting goods. Essentially, they're, again, sporting goods, shoes, shirts, whatever they sell, hockey sticks, equipment, football stuff. And so, they've been a good company for many, many decades. And they obviously peaked, in 2013, right before what happened in 2013. That is when Amazon started really, really taking off here. So they peaked in 2013, but like 33% in one day. What the hell happened here? What in God's name happened here? So they're supposed to release their earnings reports to tell their investors how much profits, or what their profits are like, what their earnings are like. So Wall Street estimated that they would make like 15 cents a share, from what I could gather here, 10 to 15 cents a share in profits, which is, that's still their profitable company. And so Hibbett Sports released today. Just be prepared, guys. We probably we're not going to have 15 cents per share earnings. We actually might have a 15 cents per share loss, actually. So they might have a very significant loss, which is obviously freaking out Wall Street, which is why they're down 33% today. And this is one of those very few times where, I don't know if they should be down 33%, but I mean, it's a reasonable reaction here when a company goes from pretty profitable to, not profitable and losing lots of money. That's a little bit scary here. So they're down 33%. And here's the other funny thing I want to talk about was that they announced on the same day on July, what day is it today? July 24th, 2017. They thought today was probably a good time to start selling stuff online. They have now officially set up their own e-commerce store. I've been selling stuff online for years now. Technically, I set up my own retail store like in 2013 or 2012 selling clothing. And now they're just catching on here. Oh my goodness. And this is a company that was at one point had a market cap of over $1 billion. I'm going to guess here. So actually, what was their market cap here? Let's go back. Let's do some quick math. 67 cents. So roughly about 5.5 times what they were. Yeah, so they were worth over $1 billion just 3-4 years ago. And now their market cap's $266 million. So, I mean, this company, they're so far behind. I'm guessing it's a bunch of old guys running it that didn't think to start selling some of their merchandise online because they wouldn't be where they are now if they had done that. They still would probably have losses because of the Amazon effect, but maybe they would have been okay and not have dropped 33% in one day. So I needed to talk about that today just because, again, whenever we see major losses of companies that are not penny stocks, I got to talk about them. This is the biggest loss I think we've ever had. You guys can correct me down below if there's been bigger losses, but I think the last one was like 26%, and it may have been Blue Apron. Speaking of Blue Apron, we have Blue Apron here. Oh no, and now it's after hours. Okay, so the market closed 1 minute ago actually. And so Blue Apron up 14% today, which is pretty big. So you guys know, I'm going to summarize the story quick because I've told it a billion times. Blue Apron, about a month and a half ago, they wanted to IPO at $15 per share, and that was reasonable. Then Amazon announced like a week after that, right before the IPO, saying that, okay, we're going to get into the meal kit delivery service, just like Blue Apron. We're going to try and take that over. And so the IPO forecast went from 15 to like 10. Okay, that's what 10 or 11, I forgot the number was. Okay, so that like cut it in half. And then after that, Blue Apron just started tanking again. They just got a bunch of bad news again, and the stock dropped down to $6.55 a share as of yesterday, I think. We can take a look here. $6.55 yesterday, $6.30 a few days ago. And so I don't know if you guys remember what I was saying. I remember specifically saying this. Look, in the long term, Amazon's probably going to kill Blue Apron. In the long term, over the course of many years, that's probably going to happen. Like, they may not kill them completely, but Amazon's can take over if it wants to. However, in the next few months, in the next few quarters, Amazon's just starting in this industry. Blue Apron's been in here for years. For years we're talking about. So I was really interested. I remember saying, I just want to see the earnings report for Blue Apron. I just want to see what it's like in the next quarter because I think it's going to be pretty good. I think that the stock is going to go up. I remember saying that specifically. And so what happened today? Well, a bunch of Goldman Sachs analysts agreed with me today. And that shot the stock way up here. It's kind of funny. If I was on TV and saying that and running a hedge fund, then they would have got that news weeks ago. So Goldman Sachs set the price target for the end of the year to $11 a share. That's what they think it's going to go to. Same with a bunch of other companies like RBC Capital and Oppenheimer. I've talked about them a few times. So they're all very bullish on Blue Apron, and that shot the stock up 14%. Just because a few analysts said that it was going to go up. But here's the deal: is like, I swear, even though I rip on, you know, whenever Goldman Sachs and whatever comes out with a buy or sell this or buy this or whatever, you know, I always kind of make fun of it because the market overreacts. But this is one of the times where I think it's a correction, because I still think Blue Apron's going to have a very solid earnings report, just my opinion, and people overreacted. People really overreacted because think about it, Amazon, they're only really serving in like a handful of cities right now and limited like 1,000 meals or whatever. And Blue Apron's already doing millions of these things, right? So that's why I think Blue Apron's still going to be okay in the short term, in the next few quarters maybe. In the long term, maybe after a year, we'll see what happens with the Amazon effect. I'm going to keep you guys updated, but this was an important story because it's just proving that I'm right all the time. So I'm totally kidding. Okay, let's go to WebMD here. Oh, I don't even know if I have the stock out here. We're going to talk about the Wisconsin chip here in a second, actually, but I want to talk about this WebMD thing here. WebMD stock. So WebMD up 19% today. WebMD is up 19% today. So why is this? It's something just makes sense. Oh, so they're actually now this does not make sense. They're a little bit higher than I thought they would be about an hour or two ago when I checked it. So WebMD, that site where you go and you're pretty much told that you have cancer when you have the sniffles, it's getting sold. It's getting sold to KKR Private Equity for $2.8 billion. Let's check on how the stock has done in the past few months, actually. Look at this. Jesus. Okay. So they've done okay. WebMD, so yeah, it's a big site. They're being sold for $2.8 billion. Now, that works out to, I think I did the math, $66.50 a share is what it's being sold for. So rightfully so, if that's what they're being sold for, then that's obviously the stock should be worth more than $57 or whatever, $55 than it was worth yesterday. So again, this is another buyout that has caused the stock. Look at this cyclical. Oh my God. Look at all the cyclicals. So if you bought this stock in 2007, you would have made 11% over 10 years. Oh boy. But you would have made think about this. This is how crazy the stock market is. From 2007 up until yesterday, you would have made roughly what? You would have lost 8% on this stock. But because of one day, you would have made 11%. That's how crazy the stock market is sometimes. When you bet on these companies, they don't pay a dividend. They're a one-trick pony. Everyone's betting hot on them for some reason. But I don't know. It's kind of cool, though, because what I do respect, though, is that it's a pure internet company. I mean, I guess it says right there. It's a pure internet company. And, again, it's over $1 billion. I mean, you got other companies, obviously Amazon and Google and stuff that are very internet based, but this one's just like literally a website that's being sold for $2.5 billion. So that's really interesting. If you bet on them in the last few days, congratulations, you made 19% on your money. So next thing I want to talk about is actually, we're going to go back here to this microchip story here. So this I don't know what this is from the BBC. So it was all over the news today. I just brought up this article because why not? So there is this company called 3 Square Market in Wisconsin that wants to implant its employees with microchips here. And so I guess I haven't read this article specifically here. So, but 50 employees so far have signed up for this chance. And let's see, they are $300 per chip, which allows them to open doors, log into computers, and purchase food. And so here's my opinion on this. Would I want one of those implanted in me? Would I want to be the first one to do that? No. Do I think that this is going to make life a lot easier and just, instead of, I forget my keys all the time when I walk out. And think about this. If you were just to, if this evolves into other stuff, forgetting your keys for your car, even Amazon, I thought of this. This is the first thing I thought of. Amazon. They want to make that store where there's no credit cards, right? Where you just walk out with your phone. Well, what if you don't even need your phone? I know that they're going to stick to the phone, right, for the next few decades, but I'm saying this is a technology 3 decades down the line, 4 decades down the line, where I could see everyone having this. Almost everyone having this. Just chip, you walk in, you get to unlock your door. If you don't have the chip, then you can't get in. Now, it's going to make it easy to hack, I guess, but then again, you can just break down the door if you really want to, so right now. So, I don't know. What's your opinion on this microchip stuff? I'm a fan of it. I wouldn't adopt it right now, but in the future, totally. Seriously, if it meant I didn't have to lug around my 7 or 8 keys I have there for the office and home and all that stuff, then I would totally do this. But what do you guys think? And so, by the way, this is one company, though. So do you think that company, obviously you can't force your employees to do this. So if you were working for a company and they asked you, not forced you, but asked you to do this, and it was free, and maybe they would even pay you. How about this? What if they would pay you an extra $1,000 a year to get this little chip into your hand? Would you do it? You wouldn't even feel it. It wouldn't affect, it would be the top of your hand or whatever, wherever they put it. Would you do it? I wouldn't. It's not enough money for me. And how much money would it take for me to actually do that? I don't know. How much money do you think it would take? I'd probably do it for like, I don't know. If I had to do it permanently, I'd ask for over $1 million. Seriously, like over $1 million to do it right now. But if it was just for a year, I'd do it for 10 grand, maybe 20 grand if they were to pay me. Anyways, I thought that was a really interesting story because it's just where we are going into the future, and I don't know, I'm really excited for it because again, that would just make my life a lot easier if I could do that for my own stuff. So another big story today. I forgot to talk about this before moving on here. So Hasbro. Oh boy. So this is, again, one of those weird stock things, which is just everyone's scratching their head about. So Hasbro had their earnings report come out. Okay, Hasbro had their earnings report come out, and it essentially said this. I'm going to summarize it for you guys here. So they had good earnings. Okay, they had relatively good earnings in English. I think that they even beat expectations, actually, Wall Street expectations. They had good revenue growth year over year. So they have had, I think they had 14% more revenue this quarter than they did last year and last quarter in the exact same quarter. So again, good revenue growth. And again, yeah, earnings beat predictions, but the stock dropped 9.44% because revenue slightly missed the expectation. Like overall revenue, not growth, but overall revenue slightly missed the mark. And so clearly because of that, Hasbro's worth $1.5 billion less than it was yesterday, right? Than a few hours ago. This is just one of those dumb things that I hate about the stock market, which I talk about all the time. And I don't know. I think that Hasbro is a toy company. I don't really know. I guess I'd have to look into it a little bit more here. But I guess look at this. They're growing as a company, for a toy company that I thought was going the way of the dinosaur. They really adapted here. I mean, look at this. Wow, look at that growth. If you bought their IPO in 1978, 104,000% return on investment. Holy Jesus. That might be the record. No, Apple's definitely the record, right? Actually, let's compare this. I want to just 10 cents a share for Hasbro in 1978. We're going to take a look at Apple here. So 104,000% return. Let's take a look at Apple's. Apple might have the best return ever. Let's take a look here. 51 cents a share? No, because they started out 5 times as much for the share price in the 70s. So Apple has had a measly return of 30,000% since it IPO'd. All right, so I just want to talk about Hasbro. I think that obviously they're doing okay. Revenue's up compared to last year. Earnings are up. I mean, what else do you got to say here? Why is the stock down? I just don't know. Just revenue missed, and that's worried a lot of people. But again, I always like to look at how a company's done in the last 5 years here. So in the last 5 years, I haven't seen their earnings reports. I could look at it right now, but I don't really want to. Over the last 5 years, but Stock's gone up 219%. I'm assuming they've increased revenue almost every single year since then, since 2013. This is a company that right now is on the way up. It just had a little bit of a hiccup today. And that's really all it is. That's all it is. Look, I mean, look at it here. Look at all the hiccups here. They had one in November of 2015. They had one here in July of 2014, a minor one. They had another one here in December of 2016. So this is just another hiccup. If they keep doing what they're doing, this should be a safe stock. They pay a 2% dividend. This should be okay in the long run here. That's what I'm trying to say here. So we're going to move on to the next topic, which actually, just before I forget, I just want to mention Google. So Google, they have their earnings. Oh, they crossed $1,000. Congratulations, Google. $1,000 per share. So they have their earnings report coming out in the next few hours here. I thought it came out already, but oh, maybe it did come out. It just dropped about half a point there. So I'll keep you guys posted on that. I think that it'll get hurt. The word is that, you know, they're going to have to pay that fine to the European Union of $2.7 billion. So that's probably going to hurt their earnings report coming out here. But I guess we're going to see what happens. We'll see. I expect okay earnings, but I don't know. I'll let you guys know. Hopefully, I'll have you guys updated by tomorrow. We're going to talk about the last thing, and then stock market winners and losers. We're going to talk about Amazon quickly. So do you guys think, serious question, is Amazon the most valuable company on earth? I'm not talking about in terms of revenue. Do you think that they have the potential to become the most valuable company on earth? Because it was an interesting report that came out today. I've been talking about this for a few weeks now. I think that they're going to overtake Apple. I don't know if it'll be in the next few years. In terms of revenue, they still have a long way to go, by the way. In terms of revenue, I mean, they still have, what, $200 billion to $300 billion to catch up on, even $400 or $500 billion to catch up on Walmart, okay? They still have a long ways to go to catch up with the biggest companies in the world in terms of revenue. But they have the highest potential for revenue, to become the first monopoly of the entire world, kind of, close to it. I mean, J.D. Rockefeller and all those guys, and the railroad guys like the Vanderbilts, I mean, they had a monopoly in the United States. And I guess J.D. Rockefeller, he had oil, and I think other countries too, but it was mainly America. But seriously, this could be one of the first near global monopolies if they keep growing. Now, I'm going to be competing with them with my e-commerce marketplace, and we'll see what happens there. But by the way, that's getting better every single day. I'm coding a little bit more. It's coming closer every single day. And I'm going to make a video probably today or tomorrow or the next day about some really interesting thoughts that could separate me from other e-commerce marketplaces. And I'm really, really intrigued to talk about that and to seriously ask you guys what you think about it. Anyways, I just wanted to, so Amazon, could they be the biggest company? I think that if they keep going at this pace, they will be. They are finally really profitable, $4 billion, I believe, last year in 2016. They're doing really well. So, I don't know. It was an interesting thought. Out of all the companies out there today, they have the highest potential for growth, and that's why their PE ratio is almost 200 right now, which is ridiculous. By the way, Amazon stock hit like $1,030 today, so they're at an all-time high. Anyways, we're going to move on to stock market winners and losers. So I cannot go through this entire video without talking about Tesla because they're up 4% today. So has Tesla rebounded from its downhill? Well, no, not really. They're still recovering from all their all their investors being scared off. When I make a video on that, July 3rd. Wow, time really flies, eh? So Tesla up 4.3% today. Blue Apron, we talked about them, up 14%. WebMD, we talked about them. I had to mention Wynn Resorts. They had a good day today, up 3.38%. It doesn't say their market cap here, $14 billion. So I like to keep track of them because they're the Nevada, Vegas casino company, right, and hotel company. And, I like Vegas, so I always keep track of them. They're kind of like the cool, badass billionaires that are also kind of greedy and, morally don't do good things sometimes. But they're still cool. They remind me of my grandpa a little bit. That casino feel, I don't know if your grandparents were like that, but my grandpa was seriously, he was like Don Draper, right? My grandpa was an executive at a bank before banks were really big and ruled the world. And so he was like a sales guy. He was like a sales executive for most of his life at Canada Trust, which turned into TD Bank in the 50s and 60s and 70s. And so, yeah, he was a Mad Men guy. He was so good at card games. He was Mad Men, slicked back hair. I mean, he was one of the coolest guys I'd ever met. Probably the coolest person I'd ever met in my life. We're going to see if someone could beat that. I don't think so. He's just that old school kind of cool. And Wynn Resorts with that casino Vegas feel. I mean, it reminds me of my grandpa a little bit. So, soft spot in my heart for Wynn Resorts there. Even though as they are as a company is completely different than what I'm thinking of. They aren't obviously Mad Men and stuff, but from the show Mad Men. But anyways, we're going to move on from that. I'm rambling too much here. We're going to move on to the losers. We talked about Hasbro. Oh, another bad day for Mattel. I just made a video ripping them. It should be out today. I mean, it's really unfortunate. Their dividends down. No one's believing in them anymore. They are going the opposite way of Hasbro. I mean, look at this. Hasbro over the past 5 years has had a lot of growth, and Mattel's down 55%. So, just another bad day for Mattel. What can you say? After Kevin O'Leary sold his company to them, they've just not been doing too well. No, I guess that they grew up until 2013. When did Kevin O'Leary sell his toy company to Mattel? Was it early 2000s, like 2004? 2003, 2002, somewhere around there. I forget. Anyways, another one just before I go. So we talked about Hibbett Sports, but that indirectly caused Footlocker. Footlocker stock down 4.5% today, indirectly because of the Hibbett Sports news, because it's another retailer, a sporting retailer that's not doing too well. So Footlocker dropped 4.5% today, which is $250 million. Oh, they pay a dividend. That's kind of cool. So they pay a dividend, and again, they're another loser today. But again, we had some big winners today and some big losers. Like this is some of the biggest movers and shakers we've ever had on this show right now. We've had Blue Apron 14%, WebMD 19%. I mean, Hasbro down 9%, Hibbett down 33%. Today was a pretty big day. So I'm going to wrap this video up. I'd like you guys to leave a comment. What do you guys think of the screen cap like this? For me, it makes life, a little bit different, maybe even a little bit easier because I don't need to transfer this from my camera to the computer anymore. But if you like this, if you like the screen capped version where you just get to see the live stock stream from what I'm doing, then seriously leave a like and leave a comment. It really helps me out to know if I should make more of these or not, because I think I do like making these better. I might do it anyways, but anyways, thank you very much for watching. You can check out my stock market program. The link should be down below somewhere. And I need to make another. Sorry, I've been lagging behind on that. It's been about a week and a half or 2 weeks since I uploaded my last video on there, but I'm making another investment. I think today I should be making one, and so I'll upload my video on there about what I'm investing in my portfolio. And I think I had a good 2 weeks. Yeah, I had a pretty good 2 weeks there. I think I was up a couple percentage points. So, anyways, thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.